Hello, Mike Des. Yes, welcome. Yes, so it is a Friday night. I know everyone's tired. Um, me too. So, I'll try to keep this short. It seems like a short question. So, just do note that, oh wait, my title is off. Oh wells. Let me fix this, I guess. I do not know what the lesson material is gonna be. We'll go as we'll see how it goes. But for now, uh, yeah, this is question 4. Last session we did question 3. So yeah, without further ado, let me invite my friend. Hey, we're live. Wait, hang on, let me unmute you real quick. Yep.
Hello.
Yeah. Wait, can you speak a little bit? I want to see how your volume's doing.
Hello. How's everyone?
Okay, let me boost you a little bit. How about now?
Hello.
Okay. Yeah, I think we're good.
All right.
All right. You want to just jump into the question straight away?
Yeah, sure. Let's go.
Have you tried it?
I have.
Okay. Let me stream this on Discord as well, so you don't have a lag.
All right.
uh, Here. Is it the correct one? Yeah, it is. All right. Uh,
Okay.
okay. So let me just go into full view right now. If I can. Where is it? Oh no. Oh. Wait. What? Why is it? Oh my goodness! Don't hang on me, please. Oh no. So yeah, do you wanna let me know what you find difficult about this question?
Uh, Part B actually, cause it's making an insurance claim. I have no idea how
Ah, I
insurance
see.
claim
Okay.
means. Yeah.
Part B on insurance claim.
Yeah. That
Interesting.
was basically the hardest part.
Hmm. Yeah. Okay. Well then, how about? I mean, you said you did A, right? So what's your answer?
I debited impairment loss and I credited inventory.
Okay, so you debited impairment loss, right? And then you
Yeah.
credited inventory.
Yeah.
By what amount?
2250.
2250. How do you get the number?
61 to 50 minus 5900
Okay.
59,000.
So you get 250, right?
Yeah.
Okay. So well, here's a recap. Well, asking you to try and recall, right? So
hmm
what is impairment loss?
Uh, Impairment loss is a uh hmm, uh liability.
It's a liability, but why?
It
Oh, sorry.
loses you. It has made you lose money.
Okay.
Yeah.
But has it already made you lose money?
Yes.
Okay. Then oh wait, what happened to? Sorry about that. Yeah, then yeah, if it has already made you lose money, then can you really call it a liability?
Oh, okay.
Hmm.
Okay. Right. Uh, uh,
Yeah.
what's what? Okay, I'm shuffling through like three different books because I'm a mess. The E
No worries, take your time.
P
It's okay.
R uh what was R? Fuck. Uh,
Hmm. Okay. Asset,
I
liability. What's the other one?
uh Equity process and I forgot the last one. I forgot what R was.
Okay.
Uh,
Equity is made up of.
Not liability.
Okay, that is the casual definition. Yes.
Right.
Uh.
Uh,
Okay. Well, then when you look at a profit, like income statement, right? How do
yeah.
you derive the number at the end?
Uh, income statement.
Hmm.
Uh,
What do you start with at
profit
the
of the
start?
year. You start with uh, let's
R?
see, revenue. There
Yes.
it
Yeah,
is.
very good, very
Okay,
good.
that was
Yes.
the word.
Okay, and then what do you do with revenue?
Revenue you minus of cost of sales.
Mm-hmm. And what is cost of sales?
Cost of sales is an
It's an
expense.
expense, yes. And but why do you put it there?
Uh, Cost it has incurred.
Hmm, okay, okay. Well then can you explain what exactly cost of sales is?
Uh, What's my definition? Cost of sales is the hold on. Crap, I can't find it. Cost of sales is the expense incurred to make the sale, I believe.
Okay. Yeah, so when you sell a good or something, I mean you clearly bought it from somewhere, right?
Yeah,
Yeah, so when you sell it, you gotta record, oh yeah, how much did I actually buy it for?
right.
Yeah. So that is cost of sales, yes. Alright, then what do you put what do you get out of it? You know,
What I
after
get?
subtracting cost of sales from revenue.
Gross profit.
Gross profit. Okay, then what do you do afterwards?
Gross profit you minus off other expenses for
Hmm.
profit of the year.
Okay, okay, yeah. So that's the basic gist of it, right? Then where does
Right.
profit of the year
Oh,
go? Well, I mean,
uh,
profit for the year.
profit of for the year goes under assets, I believe.
Assets?
Was it? Or is it
You
equity?
received cash in the form of assets, right?
Right.
From selling something. Then your profit would it go into assets as well? Would it increase your assets? Remember what's the
Uh,
equation? Wait, let's go back to the basics. What's the equation?
A equals L plus E.
Yeah.
So
If your asset increased from making the sale, right?
equity goes up, I
Equity. Yeah,
believe.
yeah, you're right. So profit for the
Okay.
year will go into equity.
Okay.
What about loss for the year?
Loss for the year will go. Uh, Will it also go into equity?
Yeah, yeah.
Okay.
So yeah, instead of increasing equity, you just decrease equity.
Decrease. Right.
Yeah.
Okay.
So yeah, you got the rough idea. Maybe a few
Okay. Okay.
more active recall. So next
Right.
time maybe near the end of all these questions, you gotta not use your book.
Oh, my book is pretty much irrelevant other than the profit of the year equation.
Ah, okay,
Yeah.
okay, yeah.
Uh, I couldn't find whatever I wrote about previous lesson. It was hardcore, like trying to remember everything.
Understandable. Okay, okay. All right. Have you checked the answer for your part A? I mean, we're done with revision for now.
That is true. I have not checked it.
So it might be
Uh,
different because depending on the syllabus and what they actually want you to learn.
right. This is topic 2. We're on question 4. Debit impairment loss on inventory 2250 and
Mm.
credit inventory. So I was correct. Yay!
Nice. Okay. That's good. That's great. That's great. You're improving.
Yay!
Yeah. All right. Okay. And then, well, okay. So let's ask you a question. Why do you credit inventory here?
Uh, because the value of inventory has decreased, and
Mm-hmm.
you have to match it by the impairment loss.
So the impairment loss caused your inventory value to
Yeah,
decrease, right?
yeah.
Okay. And inventory is what type of accounts under the accounting equation?
Inventory is under assets.
Why is it an asset?
Cause it will bring in money in the near future, foreseeable future, whatever.
Okay.
Sometime in the future.
One more criteria. There's one more
Uh,
criteria.
One more criteria.
It's gonna come from
It's gotta come from uh somewhere somehow it
Yeah,
has
yeah.
to come in.
That's
Okay.
right, that's right. Yeah, you got it. Nice. Okay, then now that you know that inventory is an asset, when you decrease it, you credit.
Yeah.
Yeah. So yeah, so that's the thought process you should follow when you are stuck on like what to debit and what to credit. You
Okay.
take the account that you're most familiar with, like inventory, cash, um, accounts receivable, trade receivable, the sort of accounts like very real world, not so abstract accounts. Then you identify it, and then you try and think of the pair that links it.
Mm.
So yeah, good job, good job. You really did well here. Uh, right. So let's move on to part B, which you say is difficult, right?
Yeah.
Okay, so you check this insurance policy, discovered payment in full for the lost inventory from the insurance company, and then state the double
Double
entry required
entry
to record
required.
adjustment at
Uh,
2022.
I have a attempt at it.
Mm-hmm.
I debited trade receivable and credited inventory.
Trade
I'm not exactly
receivable.
sure why. Yeah, cause it says can receive payment in full. So
Okay.
uh
Sure. So
with
you
trade
debited
receivable.
trade receivable and you credited
Yeah,
inventory.
inventory. Yeah,
Okay. Let's break it down a little, right? So
yeah.
why did you debit trade receivable? It's just.
Because it's money she will receive in the
Mm-hmm,
future. She has not received yet,
mm-hmm.
and
Okay.
she's
Okay.
guaranteed to receive it. So I debited trade receivables.
Okay. Okay.
Trade receivable goes up, and then trade receivable was is incurred by the loss of inventory. So I credited inventory.
Okay. Let me read this question really carefully here because I feel like there's a trap somewhere.
I've been second guessing myself the entire time.
Yeah, yeah. Understandable, yes. So, to record the adjustment in value of inventory at this. Um, mm, okay. Do you know what this pair actually means usually?
uh Sales made.
On cash, on credit,
On credit.
on
Sales
credit.
made
Yeah,
on
yeah. This
credit.
sales on credit.
So something is wrong. It's just my thought process is right, but something went wrong.
I think your final product is right, but the entries you make is slightly off. But I could be
Right.
wrong because I don't know the answer.
If you want, we could work
Oh yeah,
with the
sure.
model answer
We
first.
could work backwards from the model answer. Yes.
Right. The model answer states you debit insurance receivable by 2250, and you credit impairment loss on inventory by
Hmm.
2250.
Okay. So right. Let's explain why the answer said that. All right. Trade receivables. What's the meaning that you kind of feel when you say that word? Say those two words. Trade receivables.
Uh, okay. Okay, now that you ask me from this point of view, I kind of see it now. I kind of see where I went wrong with that.
No, no, no.
It
I
is
want you to vocalize it. You need to say it
right.
out.
It is receivable from a trade,
Hmm.
so it has to be sales made.
Well, you could say normal course of business, right?
Right.
I think that's a better word for it. So, cause you don't need to have sales to get some receivables from somewhere. But if you say normal
But
course
there
of
has to be a
business, it is more broad. It's also still accurate, right?
right.
Yeah. So,
Some form of
hmm,
transaction.
well, this is more advanced. So let's not dive
Okay.
into it too
Okay.
much.
Let's not sidetrack here.
Right. No, no, don't worry, don't worry.
All right. All right.
Yeah, so usually, okay, I think at your current education level, you could just use the word that they give. So for example, like insurance, it's just insurance receivable. If
Uh
it's like
huh.
um let's think. Maybe like deposits, deposits received. or like
Uh-huh.
deposits receivable, things like that. So you can just use the word. So for example, if you incurred like interest expense and you didn't pay it yet, you interest payable.
Okay.
Yeah, so just add the account and then add the receivable or payable behind it. As long as it makes sense, like language wise, usually it's
Mhm.
okay.
Okay.
Usually. But of course there always be outliers, so that's what we need to
Right.
be
Right. Right.
careful of. But
Okay. Okay.
yes. For now I think yeah. And then why did we credit impairment loss here?
Uh, if I were to take a shot at it, I would
Mm-hmm.
say it's because uh the loss is technically covered by the insurance.
Mm-mm.
So yeah, so you credit the loss because the loss is no longer there,
Mm-hmm.
and then it's instead replaced by insurance receivable. So you debit insurance receivable.
Mm-mm. Yeah, so that is a good answer actually. Yes, so because your loss was already covered, right? You
Yeah.
shouldn't disclose it in your financial statement.
Okay.
Yeah. So I think that's what they're trying to get at there. And also, you need to remember that your first journal entry was actually already passed. Your answer from A is actually a prerequisite.
Uh, okay.
Mm-mm. So then that way you have cancelled out your impairment loss amount.
Okay.
So I'm just gonna write down the value so that I don't confuse the viewers. Is it on screen? Oh no.
Yeah.
Let me just see
It
if I
is.
can
It
scroll it.
is on screen.
There we go. Okay. I will upload this document anyway, so
Okay.
yeah. So yeah, this is part B, right?
Yeah.
So in your own words, explain why. Explain your journal entry then. Sorry,
Okay.
explain the answers journal entry. Why do you think
Answers
this?
general
Yeah.
entry. Uh, as in part B, right? For part
Yeah.
B,
Yeah.
uh, they debited uh they debited the insurance receivable. It's because
Mm-hmm.
the payment has yet to come in, so it's a receivable.
Hmm.
And well, you name it under insurance because it's technically not a trade receivable. It's not part of a transaction. Uh, at least to me. And then you credit out uh impairment loss because the loss is no longer incurred. It is technically no longer incurred because it's
Hmm.
covered by the insurance. So you credit impairment loss. So your inventory remains the same value.
Inventory. Well, not really. If you realized,
Does it
what was
not?
the impact on the inventory after the entry in A, the inventory decrease.
Yeah.
Then you look at B. Did you touch inventory for B?
Okay. So it doesn't
Hmm.
technically completely cover the. Okay. Okay.
Yes,
Okay.
because you
You still have
could,
to you
yeah.
still have to show it.
Yeah.
Okay.
Yeah, and that is how you answer questions. Hopefully, you can come back to this in a future date,
Mm-hmm.
and we shall see if you can still remember. As long as you remember the rationale for doing certain things, I think you'll be fine.
Mm-hmm.
Because as long as okay, so in the real world, right, you need to be able
Yeah.
to justify why you post a certain entry, right?
Okay.
So that's why narration is important for both for you in the future when you're doing closing. Like basically closing just means well summing everything up, making sure that everything that is supposed to be there is there. And then you
Okay.
present it to your boss saying, oh yeah, for this month this thing happened.
Okay.
Mm. So yeah, and it's quite a lot of work. That's why narration is important.
Yikes.
So you know, oh yeah, this I did this, it might be wrong, but yeah, something like that.
Okay.
Mm. Well, okay. Let's go to part C. This might actually be a short video. Right.
I
So,
mean, if you want it longer, we could do question 5.
you want
If you
to
want,
do 2 questions in one day?
If you want the content, I'm down. If not, if you're okay
No,
with
no, no. It's about
having
you.
a
It's
short
not
review,
about me here.
I think I'm good. I think I'm good with just the question
Okay,
4.
okay. Yeah, then
It's
then
a
we can work with
straightforward
that.
video.
Right.
Yeah.
Okay. Name and explain accounting theory applied by business when accounting for reduction in value. Okay,
This
you
is
only
my
learn two.
favorite. Prudence theory. Yes. Okay,
Okay.
let me pull up my
Maybe
notebook.
not theory. Use principle instead.
It does say theory.
Oh, you
Name
use
and explain
theory.
the theory.
Okay.
Yeah.
All right. Then just use what they want. Because it can be
A cautious
principle. It
and
could be.
pessimistic measure. A cautious and pessimistic approach to inventory value. Yay.
Okay, then
Okay.
you gotta memorize the textbook definition, unfortunately.
Yeah. Let me see. Let me see how they want to describe it.
Hmm.
Uh, prudence theory. A business should not overstate its assets by
Mm-hmm.
recording the value of ending inventory at
Mm-hmm.
the lower of cost or net realizable value. Did I get right this
Okay.
time?
So they want the application to the inventory itself. So you need to
Yeah.
describe both.
Yeah.
So this question is a bit um requires a bit more from you than just stating prudence and also what it means.
Yeah. It just says name and explain. So.
No, no. I think the keyword here is applied
Oh right.
reduction
Applied.
in
Okay.
value. Yeah, this is the important part. Mm. So you get it right?
Yep.
Okay. And so far, any questions? Anything?
Uh. uh Let me think about it. So far, no. Actually, today's question is very straightforward.
Mm.
Other than like part B. Part B was a little trippy.
Mm.
But other than that, it's very straightforward things I have learned, and the double entry part, the thought process is quite straightforward.
Okay. Well, then, do you want to do some revision? Since we have a
Yeah, sure.
little
Let's
bit
do
of
it.
time, right? Okay. So revision time.
Okay.
Firstly, how do you measure the cost of inventory?
As in,
The
uh,
number.
uh, the the net realizable value, the lower net realizable value.
Okay, lower off.
Uh, lower of cost
Mm-hmm.
and net realizable value.
Okay. All right. What are the different ways you can measure the cost of inventory?
Different ways. FIFO.
FIFO and
Uh, and average, I believe.
average is part of
Uh,
it. Yes. What's the word in front of average?
uh, weighted average. There
Yep.
we go.
Good. 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 Okay. Well, then there's a third one that isn't allowed in your syllabus.
We don't touch it. We don't touch the forbidden one.
Okay. All right. I'm just gonna write it out. Okay. Here you go. Just note that yes, it's only GAAP. Okay. Yes.
Okay.
All right. Let's think about something else here. Actually, to be fair, this is essentially it, right?
Yeah.
Yeah. Yeah. So.
This summarizes the entire topic.
Hmm.
The rest is all just applications at this point.
Yeah. Okay. So let's dive a bit deeper. What is NRV here?
NRV, net realizable value.
Mm-hmm.
Uh,
How do you calculate it?
crap.
Oh no. I see. It's very interesting that bots are visiting us. If you're not a bot, I'm sorry. I think that might be a bot, but okay. Alright, continue. So what
I'm
what do
not
you
sure.
think?
Can you freshen me on this? I actually cannot
Okay,
remember
okay, we
this.
start with selling price.
Okay.
Right, you're looking at the market, you're looking at the selling price. And then what
Right.
happens?
Uh, you minus of cost of sales.
Like you say for example you damage the uh What's a good one? What's a good
Uh,
item that you wanna sell?
uh, let's say a sofa for argument's
Ah, a
sake.
sofa. Okay. So yeah, you accidentally dropped it. One of the leg broke. So now instead of like a proper sofa, you just have
Oh, minus repair cost. There it is.
yes. Okay, good.
Okay.
Yeah. So, the repair costs. What is the repair for?
Uh, as in,
Mm-hmm.
okay. The repair is
Well, to what
for
state does the repair restore this item to?
restore it to uh.
Mm-hmm.
s-
I mean,
I want to say
use
second
logic a
hand.
little bit.
Uh, I want to say like second hand item, but it's
Second
like
hand. Okay, yeah, that's a good attempt. Well, you could have sold it last time, but now it's broken, so you can't sell it. So if you want to restore it, well, how do you restore it?
how do you restore it?
I mean, like, to what state do you restore it to?
Functional.
Functional? Yeah, we could also say sellable state, right?
Oh, okay.
Yeah. So that sellable state could include a lot of things. It could include the repair of the
Okay.
item itself, right? It could also
Uh-huh.
include things like packaging or like the maybe marketing just to bring it back to a sellable state.
Okay.
So for example, you have an item that say obsolete item. Say you have like those Nokia phone.
Right.
Actually, no, that might be a antique by now. Say you have a very outdated phone that isn't an antique, and you want
Right.
to restore it to sellable state, right?
Right.
So it could be in perfect condition, but you can't sell it because no one wants to buy it, right?
Right.
So in order to induce all this, you might have to incur some extra costs as well.
Such as marketing schemes.
Yeah. But okay, this
Okay.
is very subjective as well.
Okay.
So it's just an analogy as
Okay.
like the more complicated versions of like what does it mean to restore it to sellable states.
Okay.
But for now, you can just remember it as the leg broken, fix the leg.
Okay.
Yes.
Very well.
Okay. Let's see what else we need to cover here. Okay, in your own words, explain what FIFO means.
Uh, first inventory taken must be the first to be sold.
Okay. Then how do you use it in real life? Or where is it used in real life?
Uh, mostly used on perishables.
Okay. What about weighted average? What does it mean to you?
Uh, weighted average. So let's say you take two batches of inventory at two different prices.
Mm-hmm.
You calculate the average between the two, and that's your weighted average. That's the price of inventory you take it as.
Mm-mm. Do you have any explanations that make you remember that easier? Or
Honestly, no, that is the only way I process
you've
this.
only way you've processed. Alright.
Yeah,
Let's say you have enough capital to just buy gold bars.
right.
Oh, I can't draw. Never mind. Yeah, so say you have
Yeah,
like a lot of gold bars, right?
right,
But you bought it at different prices.
right.
And you threw them in one pile. Does it matter when you
Mhm.
bought the gold?
No, it no longer matters.
Right. And are you still able to, well, say like you have like thousands or tens of thousands of gold bars? Are you gonna manually count like 10,000 uh, batches?
No,
No,
that
right?
is true.
Assuming you only
Yeah,
bought one bar per batch,
right.
right? So then you use weighted average to calculate your average cost. Are you okay?
Yeah,
Yeah,
yeah. I get it. I get this analogy.
it's easier to remember.
Yeah.
Okay, then I mean you can repeat it to yourself in your own in your own way as well.
Wait,
You could just use
just,
anything other than gold bars. Like
just start chanting to myself, cross-leg up. I'm dead.
gold bar, gold bar.
No, that's a sad thing.
I mean, you could use different things, like things that are well very similar or if not identical. Like you could say like your currency, your coins, they look the same, right? right? Yeah, so your currency could be the same. Uh, the cost might not be the same because the materials to make them are different. Like
Right.
it costs differently at different times. So that's one more you could think about. You could come up with your own one if it makes you remember it easier. Right.
Okay.
Okay. Other than that, do you have any other questions? Anything you want to explore?
I do not.
You do not? Okay. Oh, that
Yes.
was a very productive 30 minutes. The shortest it's ever been.
It was the most productive 30 minutes I've ever had in my life. I've never
You're
focused for this
exaggerating,
long.
man. Come on. Okay, okay.
I've never done so much before.
Right. Let's
I'm
do one
confident.
last scroll. Like scroll up to witness everything, right? So,
All
well,
right.
today what did you do? You recap what the accounting equation is. So what is it?
You're connect. Asset equals liability plus equity.
Mm-hmm. Nice, nice. Okay. And
I've
you
learned that
finished.
impairment
Yeah.
losses is under equity instead of
Mm.
liabilities.
Okay. Yeah.
Liability is is in the future that will lose you money. So
Yeah,
yeah.
yeah, yeah. So it's not really lose you money per se, but you gotta do something that requires you to well forego some of your own benefits, right?
Right,
Yeah.
right. Outflow of
Mm,
outflow
mm.
of
Correct, correct.
asset. Yeah,
That's the official term, I guess. Like outflow of
right,
economic benefits, future economic
right,
benefits. Yeah, whatever that means. Just say you're gonna lose in the future.
right.
You're gonna lose
Okay,
something in the future. Yeah.
okay, fair
Mm.
enough.
Okay. Well then you did part A very well. Yes, good job. Still very proud of you for that
Yay!
one. Right. And part B you did try, and that's honestly more than enough. Uh,
The thought process is there. It's just the
mm,
terms were not there.
So yeah, I mean the correct answer we went through how we derived it. So in the future you gotta step up a little bit and
Right,
come up
right.
with the answers yourself as well. But it's a good
Okay.
attempt, good first attempt for part B. Mm. In fact, you solve
Yay!
sales on credit on your own instead, so at least it's not completely wrong, alright?
Okay.
Mm. Okay, then well, okay, well the
Plus,
prudence,
it's just a recap.
your
Yeah.
favorite theory, and then we did a lot of recap. Yes. Alright. Yeah, so at this juncture, no questions?
No questions.
Alright. Well, enjoy the rest of your night. You have a very early dismissal
Alright.
today.
Yeah. Thank you.
Yes, thank you so much for being such a good student so far.
Thank you for being a good teacher.
Yes.
Good night.
All right, I'll see you around. Bye
Bye
bye.
bye.
Right, so yeah, that was a very very short session, but we did go through quite a bit of important items, things like recapping, what we learned so far, and also we learned something new today. We learned about insurance receivable. So what that just means is that yeah, there's insurance payout in the future, but they have not given us yet. Oh no. So we just record it as we're gonna receive it in the future. And number two, it came from a past event, meaning it has a history, right? Its source is you bought the insurance policy, you paid the premiums every year, and now they're paying you because you suffered a loss from something, right? So that is the history of this insurance receivable. Therefore, you can count this as an asset, right? I don't think I've explained to my the student why it's an asset, but yes. If you're watching this back, yes, this is the explanation, right? And impairment loss is an expense. Why? Because it describes your inventory losing value, right? If your inventory has lost value, it means that there is going to be a decrease in your future outflows, right? Because your inventory is worth less. And so you recognize that loss at the start. So at first, you recognize it instantly, right? As an impairment loss. So impairment loss is used to describe what happened to your inventory. Therefore, it can't be classified as, one of the three um, main accounts. But it technically lies under equity because it has to lie somewhere, right? It's not, I say, it's not liability, therefore it's equity. So yeah, this will take a while to actually process. You're gonna need some time. Maybe draw it out in a diagram or something. Anything that makes you understand it in a better way, you can try it. If it doesn't work, you can always come to me in either the chat during my lessons, or you can fill up the anonymous form. I will actually redo the lesson. I'll upload another version of it where I try to tackle this from um another angle, right? And yeah, so that is actually the end of our seventh lesson. Wow, time really flies, huh? But to be fair, I'm only going through one question per session. But yes, it's always been very fun to solve these questions again, especially from a different perspective, come from a different background. But yeah, other than that, take care of yourselves during the weekend. There is going to be a second part to this stream, not the recording, not on the VODs. Just yeah, if you enjoy the vibes here, feel free to stay for a little more while I set this up. And yeah, that is actually gonna be it for the lesson itself. I'm gonna end the recording here. So for those watching the VODs or watching right now, take care, yeah. I'll see you next Wednesday. And for those who wanna see something else, you can feel free to stay. I won't stop streaming, but I'll stop the recording right now. Bye bye.